Per usual, everything on this channel is for educational purposes only, is not intended as financial advice. For this teaching Tech Tuesday, let's talk about divergences, something that has really helped me nail counter trend trades over the years, help give confidence in bottoms and tops, and really help keep me out of trouble. So let's explain what those are, how to identify them, and I'll give some current examples on some charts here. So if you're not a new trader, you've probably heard of these in some regard. But if you are new, what we're looking for here is a difference between price and an oscillator. Oscillator in the red, price in the blue here. This is just a cheat sheet. You'll hear bearish divergence, bullish divergence, and then the hidden divergence, which is not easy to spot, at least for me. I feel like I have to look at the cheat sheet every time just to make sure. But a bearish divergence, vanilla, would be higher high in price on less momentum. You can use RSI, you can use MACD, you can use OBV, you can use %B, you can use whatever you want. A bullish div would be a lower low in price with a higher low in the oscillator. So we'll start with those. I'll get to the others in the examples because, you know, when you teach latitude and longitude at the same time, sometimes those things get confusing. And there are a lot of great cheat sheets online. All of them basically say the same thing. Something else to note here is equal lows in price versus equal lows in an oscillator or vice versa can also help tip you off as to whether or not a divergence is starting to form or whether or not you're seeing a weakness in price. Here's just another example. So before we get on to the specifics, let me talk about today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. And just off the bat, pulling up the Bitcoin chart, in order to identify divergences, what you first want to see is a higher high or a lower low. So in a range, you're not going to really see that, right? Another thing that's important to remember here is RSI does not care about wicks at all. So for all these examples, you're going to see me looking at the line chart, which uses price closes of the period, the same measurement that RSI uses. Because you'll often see people drawing divergences from wick to wick, not realizing that RSI measures from the close, not the wick. So that's important. But as we sit here, you know, we're not really seeing anything. We are seeing, you know, a series of slow lower lows, but we are seeing the expected confluent, convergent, whatever you want to call that, lower low in momentum. So that makes sense. One that I'll highlight later when we're talking about chart patterns and divergences together. This is that weak bullish div case. It's easier for me to see it in my head than to say the words because I know what I'm looking for, but a bullish div would be lower lows in price, higher momentum. Now you're not exactly getting higher momentum. This isn't even perfect. It's kind of curve fit, right? But I'd argue you were getting equal lows here. So you weren't realistically getting lower lows in momentum. Now, I was already keyed into this as a chart pattern, as a falling wedge, so it didn't really matter. There was nothing that was going to talk me out of that. But if I was looking for more stuff, you know, that would definitely be helpful. And of course, you know, the SVB low, you got a mega lower low. So that wasn't a div at all. Okay, there was tons of momentum pushing us down. So you're not always going to see a div on any extreme low. Another rule people probably use is dependent on your oscillator setting. So if we're using an oscillator setting of 14, there may be an unwritten rule where you don't want to go more than 14 periods back on RSI. I could really care less. If we make a higher high and it's on lower momentum, that doesn't bother me, right? Because I just assume that yes, that's the case. Because over multiple months, you can get a series of higher highs and lower lows in RSI. At some point, you are resetting RSI when it hits that midpoint around 50. Usually that's good enough to reset any active divergence, but any multi-month divergence is typically worth paying attention to. You know, if we zoom out to 2022, we did not see a divergence per se, that entire downtrend. You know, each lower low was met with, realistically, you know, similar or more extreme lows in RSI. So divs here didn't really tell you anything because there wasn't really any divs, arguably. You could say, well, maybe there's a div here. Yeah, sure. But at the end of the day, it didn't really matter. It didn't really help. So divs can last an extremely long time. And just because there is a div doesn't mean the market has to care, right? Just because there's a bear div and price is crushing lows doesn't mean price has to reverse. It just means price is more likely to either slow down or make a reversal attempt. So this is about probabilities here. So what do we normally expect? When we see higher highs or lower lows in price, we should see higher momentum. That's the expectation. So any deviation from that is suggestive of a divergence, and a divergence would be a sign that there is bullish or bearish weakness. Another classic multi-month bearish divergence was the entirety of early 2021. We had a series of high after high after high where RSI just never made a higher high that entire time. Eventually everything got reset as we crashed, but this is a classic warning sign for extreme exhaustion. Classically people are looking at, is RSI at 95? Sure, it was at 95 when price was at like 40K. So looking for extremes in RSI doesn't really help you realistically, especially not on the crypto side of things, because we'll just keep going, right? We'll reconsolidate and go again and again and again and again. And you can see how many times we tapped that midline on RSI, but we never made a higher high momentum. So that's an extreme example. And then a mini example, even on the current all-time high, it isn't always screaming at you. It isn't always multi-month. It can just be very small where we're seeing, a series of highs with equal momentum. In that case, it'd be a weak bearish divergence. Now, this is extremely subjective. There isn't any perfect analysis of this. But again, it's to help you look, is the market excited that we're at these lows, or do they not care, or what's volume doing, right? That sort of thing. And again, when you see an extreme low in price, this is COVID, there's an expectation that you see a mega low in the oscillator, right? So again, this isn't a divergence. This is just saying, look, this is expected. We moved whatever percentage that was on that day. That makes sense. There's nothing you can draw previously from the COVID candle that really would have told you that there was a divergence there, right? At least on higher time frames. And again, what do you normally expect with lower lows? In price, a lower low in oscillator. Again, not a divergence. That's what you expect to see. This does suggest, just based on RSI principles, that yes, we are at probably an extremely oversold level, but doesn't guarantee anything, right? So that's not a divergence. Now, what you are looking for, first is any lower, higher, high. And then does the oscillator also make a lower, higher, high? So I would argue throughout the beginning of the year, as we were making higher highs, we were not doing that on higher momentum. So how does this help you? Well, it says, if we are making higher highs, maybe I don't go max long. Maybe I wait. Maybe I take some off the table. Maybe I begin to close a position if it looks like this, right? Because this isn't saying we're going to reverse today. It says the probability that we're going to continues to decrease so long as momentum is decreasing, right? Even on this recent lethargic high, you could argue, we're just continuously making a real but weak bearish divergence, right? So we'll see what happens going forward. But based on this current high and how long it's been since we've been there and how long we've just been ranging, clearly there's not a lot of momentum in the market right now. This was 2019, and over multiple months, you were seeing higher highs with higher highs in price with equal highs on the oscillator, an example of a weak bearish divergence. Now, just because this first divergence popped up, right, doesn't mean we can't keep going. It just says, hey, be careful. Momentum has not kept going with price here. And we did pull back to that 50 midpoint, which is pretty much the resetting point of that divergence. But when that final last high was put in, we did not make a higher high on RSI. So these are definitely lagging, divergences. They don't really tell you anything until the candle has been printed. But it's important to know what you're looking for ahead of time. Now, here's an example of something extremely rare that I don't know if I've seen it anywhere else, but this was the bull run in 15 through 18 for Bitcoin, 2018. And with each attempt at a lower low in price. We didn't actually get a lower low in price. So each time we had a higher low in price, higher low in price, higher low in price, with a lower low in oscillator. So each time the momentum kept trying to shove price lower, and it just would not go down. Absolutely would not go down. And then eventually, towards the end here, you have a weak hidden bullish divergence is what I would consider it. But so something I'm watching for today going forward, will we continue to potentially see a hidden bullish divergence on price? We'll find out within the next month here. But if you ever see something like this, typically extremely bullish. So if there's an attempt to push price down based on momentum and it does not make a lower low, that is usually very bullish. Now I'm about to blow your mind, okay? I talk about changing cloud settings all the time. One thing most people don't ever consider is changing something like your RSI settings. So if we change the RSI from 14, 2 weeks look back to 30-day or 1 month look back, this can help you identifying divergences, I think, in my opinion. I like looking at higher time frame data because usually it's a slam dunk, no doubt about it. So in 2019, when we were getting equal highs on RSI, on the 14, on the 30, we actually got a bearish divergence on that last high, a pretty obvious one. So it can help you. I think it can help you more than it can hurt you when you're looking for divergences. So all the rest of the charts are using the 30 settings, but here's that falling wedge that we just got out of a couple months ago. And when you've got a chart pattern plus a divergence, in this case, a weak bullish divergence, that to me adds to the evidence that yes, this may continue to make its falling wedge on the way down, but momentum refuses to get pushed down, or momentum just isn't getting pushed down. It certainly helps solidify the bullish divergence case. Here's one from 2018, a very extreme falling wedge. Obviously, we were making lower lows there, and we were not making lower lows on RSI, really helping make this a slam dunk trade, setting the market up for, a short squeeze, because you've got people shorting the bottom, shorting late, and then having to unwind that trade as price goes higher. So this is what I want to see at any top or any bottom. I want to see a chart pattern with a divergence, because then it is more likely than not that we would get some reversal attempt. And NVIDIA and really all of the Magnificent Seven recently have had arguably some sort of rising wedge with a bear div. NVIDIA also had throughout 2022, I'm just looking back at some of these charts trying to see what I can see, just continuous lows on very subtle, maybe equal lower momentum. Okay, so it never, again, this is 30, not 14, but NVIDIA kept getting pushed lower and lower and lower. Eventually, it reversed. But again, this isn't to say like, oh, in May, we expected this thing to reverse in a big way. It just says, look, the probability continues to increase that this thing is going to finally make a move higher. Here's Tesla. Okay, in 2020, throughout the whole year, arguably, you were making lower highs on the RSI, higher highs in price. Clearly a bear div, but that isn't to shy you away from, like a 350% move. So I wouldn't look at a div and just jump out completely. Okay, I would just, again, size, leverage, etc. appropriately. And again, throughout 2022, no div, right? Lower lows and no div at all. No div to rescue you. Hidden bearish divs are hard to spot, hard to find. But if I'm looking for stuff, this could be one example on Tesla where we were getting lower highs in price, equal highs. So a weak hidden bearish div is a potential here. But even on this most recent high, very clearly you're getting higher high in price on less momentum. The div alone isn't enough to pull you out, but for me, it's a sign that it's time, right? And arguably this was a low time frame rising wedge as well. Another way you can easily identify divergences is through the cloud. So you might hear me say TKC clamp, and it's exactly what you think of it as, a C clamp, as in the tool that you put on your desk or your workbench. So if the TK lines are severely spread apart and flat, that is a sign. I'll show the oil example in a second where we have an active TKC clamp. These are hard to maybe spot because we have the data now, but as this is forming, you're getting two flat lines that's telling you we're extremely oversold On top of that, you're also seeing a divergence, bullish divergence on RSI. So anytime there's a massive hole in between the TK lines, the Tenkin and the Kijun, that's a sign that, hey, things are slowing down. We're probably overbought or oversold. And again, you can find these over and over and over again. You want to see the TK lines tight, close together. You want to see, they don't have to be touching, okay, but you don't want to see them flatten out. You want to see the cloud, rising slowly. You don't want to see a thick cloud. You want to see a thin, medium cloud. TK lines rising or falling, but not completely flat. That's what you want to see. And even back to our current day examples, arguably each time here we're making a bearish divergence and we have a TKC clamp each time. So each time it's telling you we were relatively overbought pretty quickly and momentum just didn't go anywhere. We just went straight up flat, straight up flat. A potential saving grace here is that the cloud actually isn't too fat. It's thin, so there isn't a mega edge-to-edge potential like there was in May, but this could lead to a full-blown bearish reversal at this point. Here's the oil example, current day, and this is exactly what you want to see when you're looking for the TKC clamp. You can see that, C clamp forming. This Tenkin is at this point likely to flatten out, and then it'll become even more obvious. So again, that's a sign that oil was extremely overbought based on this time frame. I don't have the RSI on here. I don't know if there was a divergence there, but there probably was. So lastly, what am I looking for going forward on Bitcoin? Not only have we really had continuous bearish divergences, but you might even be able to argue, well, maybe we've had continuous hidden divergences here, and now the divergence police are getting extremely upset because they're probably saying, well, you can't measure divergences that far back. Maybe, but we are making higher lows on equal or less momentum. So coming up here, do we make a lower low in price? That's key at 25K. Do we break 25? Yes or no? If we don't break 25, does RSI break the current level? Again, this is 30 on RSI. So I'm changing a lot of stuff here, but what does this look like on the next actual local low? I'd consider each of these a local low. So if we make no div, then we probably should keep going. That's what it's telling you. There's clearly momentum to break us lower. If we're making a hidden bullish div, higher low, lower low on RSI, then we probably bounce. So I hope divs are helpful for you. Go back, mark up some charts historically, see what they look like, see how price reacted, see whether or not the 14 or the 30 setting matters for you. And next time you see a higher, lower low, check for a divergence. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.